The crystal ball for trading may be cloudy, but statistical analysis can help us break through the haze. If you're new to my content, I'm Privacy Smurf, the mind behind Zenalytic Trading. My mission is twofold: to deliver objective, analytical content and to educate on systematic trading strategies. The goal is to equip you with the essential building blocks for developing less biased trading approaches and a comprehensive market strategy. If you're unfamiliar with seasonality or are having a problem following along, check out the video linked in the description below. Let's take a second to check out the outcomes since the last posting in week 32. Both BTC and altcoins deviated from past tendencies last week. Week 38 closed out bullish despite a bearish history. Now let's move on to see what the stats say for the upcoming week 39. The background direction on BTC is light green and the seasonal trend line is down. This shows that more weeks were bullish than bearish, but the combined net returns were negative across all the years. This data shows that in week 39, despite 57% of the weeks being bullish, the gains from the bullish weeks were negated by the greater losses on the fewer bearish weeks. The background direction on the alt chart is dark green and the seasonal trend line is down. This shows that a greater majority of weeks were bullish instead of bearish, but the combined net returns were negative across all the years. The data shows in week 39, despite 75% of the weeks being bullish, the gains from the bullish weeks were negated by the greater losses on those few bearish weeks. A reminder about the alt seasonality: with such a short history, it's less likely to be accurate on week-to-week expectations. It's better to just focus on the general movements over time. Putting this all together, if the present mirrors the past, I would expect neutral to bearish price behavior for both BTC and alts this week. If I want to take advantage of this possible seasonal trend, I'll look to take signals to the short side when price action tests resistances around 64K or a breakdown of the lows at 62.6K, 60.8K, or 59.4K. An argument can be made for another possible short trade from a testing of the zone above us at 64.5 to 64.9K, but personally I'd avoid this area as there'd be an increased risk of an all-time high breakout rally. Historical patterns point slightly towards bullishness, but this week external forces may play a part in negating that. The stock market has a higher bearish likelihood, which could in turn be mirrored in the crypto market. And while it's important to just trade what's on the chart, based on current signals, acknowledging the potential influence of historical trends can provide a valuable context for decision making. Take care, and I'll see you next week.